Even though digital stockbroker company Robinhood attracted a lot of controversy over the recent Wall Street bets fiasco, their app is still a great place to invest for beginners and experienced investors alike. A great way to ensure continuing growth of a portfolio is to place emphasis on stocks with high dividend yields. So without further ado, these are the best dividend stocks to buy on the app right now. First up is one of the biggest suppliers of tobacco products in the world. Altria Group Inc., ticker MO, manufactures and distributes both smokable and non-smokable tobacco products, and has a huge catalogue of recognisable brands, including Marlboro, Skoal and Copenhagen. Alongside this, they have ownership stake in Anheuser-Busch InBev, cannabis company Kronos Group, and e-vapor manufacturer Juul. Although cigarette smoking and general tobacco use has been in decline in recent years, the company still netted a cool $21 billion in revenue last year, and have a current valuation of $83 billion. A portion of this is thanks to their forward-thinking approach, claiming stakes in more popular sectors as to offset their declining tobacco sales. But it's their dividends that are really impressive though. Like a lifelong smoker's tobacco tolerance, Altria has seen an increasing dividend yield for 51 consecutive years, with it now sitting at a whopping 7.7%. Put that in your pipe and smoke it. With a huge market share and a very attractive dividend yield, this stock could be a great addition to any portfolio. Next on the list is one of the largest real estate investment trusts in the US. Federal Realty Investment Trust, ticker FRT, began in 1962 and has focused on densely populated coastal markets. The company has a market capitalization of nearly $8 billion and generated revenues of around $830 million last year. Like many companies, the trust fell victim to the pandemic, seeing a decline of 11% and 28% in revenue and funds from operation respectively. But recent financial data shows Federal may have one foot back on the ladder. Irrespective of the decline during COVID, the company has seen an increase in dividend yield for 53 consecutive years, with the last decade seeing a compounding rate of 4.5%. The current yield sits at 3.6%, and as the economy begins to return to normal, this figure could continue to grow, making it a great bet for investors. Crossing over into the energy space, we have National Fuel Gas Company, ticker NFG. The company, which has been in business since 1902, consists of 5 key business segments: exploration and production, pipeline and storage, gathering, utility, and energy marketing. In 2020, they generated $1.55 billion in revenue and have a current market capitalization of $4.2 billion. Their diversity in business operations has helped them keep the ship steady during both the COVID pandemic and the more recent Texas blackouts, and they have proved they are capable of overcoming any obstacle that comes their way. They currently have a dividend yield of 3.9%, a figure which has increased for over 50 years, and with a stable business model, they could reward shareholders for many more years to come. One company to place a bet on could be Real Estate Investment Trust, Gaming and Leisure Properties Inc., ticker GLPI. This REIT is one of the first to focus exclusively on casinos and other gaming properties, and they have an extremely attractive list of investments, including most notably Caesars Entertainment and Penn National Gaming. Whilst casinos did struggle during the pandemic, they are raring to go once the restrictions ease up, which could spell great news for the company. Their current dividend yield sits at 5.47%, and alongside a low price-to-earnings ratio, their stock could be a steal. Investors keep a close eye on this one for sure. It's safe to say that the stock market has been a little under the weather as a result of the events of 2020, but it's likely our next company has the remedy in stock. CVS, ticker CVS, is a healthcare company that owns a chain of pharmacies across the United States, as well as offering health insurance after a merger with Aetna Health a few years ago. The company has seen consistent revenue growth despite the pandemic and offers an attractive dividend yield of 2.24%. Expert analysts are predicting a bright future for CVS, and their low price-to-earnings ratio could make them a great bet for the future. The final stock on our list is telecommunications company AT&T, ticker T. Based in Dallas, the company is most famous for their mobile phone services, but also generates revenue through cable and internet offerings. They originally boasted a whopping 7.18% dividend yield, but in May they announced this would be cut, which prompted a drop in stock price. It's not all doom and gloom though, as they have announced that the yield should remain higher than 4% after the cut. This drop could signal a great time for investors to buy in, as the company is well established and has plenty of promising projects in the pipeline. Here at the Stock Dork, we want you to succeed on the stock market, build long-term wealth and secure your financial future. Why try and figure out the market on your own when you could use Motley Fool Stock Advisor, one of the most trusted names in the financial industry? Their platform is fast and easy to use and has generated over 4 times the value of the S&P 500 over the last 19 years. Sign up for Motley Fool Stock Advisor today and receive 50% off the list price. And if you're not happy after 30 days, you won't pay a penny. And that's a sure bet. So there you have it. Stocks that center their operation around providing high dividend yields for shareholders are always a great option for long-term stability and allow investors to compound on their investments over time. These stocks could be the starting point for a very healthy pot of earnings indeed. Don't forget to like and subscribe to the Stock Dork and comment your favorite stocks below. Who knows, we may feature it in a future video.